Hello and welcome everybody. Welcome back to Sectors Made Simple, or if you're new around here, welcome to Sectors Made Simple. It is our goal to always provide knowledge and resources to help you invest simpler. And today, I want to show you all that we're really truly committed to that cause. Because we have been developing tools and software to help our followers invest simpler for almost 5 years now. And since then, we have made and added many new tools. But right now, we are looking at going back to basics, taking a look at the tools that we've created, and finding ways that we can make them even simpler to use. That is exactly what we've done today with our flagship tool, the Matrix, or the Sector Relative Strength Matrix. So, I want to be able to show you all a little bit more about this tool and why it is truly the simplest way to find leading segments of the market. Don't believe me? Stick around and I'll show you. So, hello and welcome to everybody. Let us get started. Today I will talk a little bit about strategies. So if you've seen financial education videos or investment education videos, this should be no surprise. Past results do not guarantee future performance. So whenever we're doing back testing or looking at something that has done well in the past, that is not a promise it will do well in the future. Unfortunately, nobody can predict the future. If you can, let me know what the winning lottery numbers are. I'd love to know. But in the meantime, for those that can't predict the future, we need to understand that past results don't guarantee future performance, but also what I want to share with you all today is meant for educational purposes. It is not investment advice. Me showing something on a buy signal does not mean go and buy that thing right now and foreclose your house to do so. Simply, all it means is that I want to show you all a way of thinking and encourage you to take what I share, trust but verify the results for yourself, and make your own investment decisions. That is what we want to empower you to do here at SMS. Make your own decisions. So, let's get started. The goals for today's webinar are extremely straightforward. We want to show you all a little bit about what we've been trying to do to improve our tools here at Sectors Made Simple, and more importantly, today we're going to focus on our flagship tool, first tool we ever released, the Matrix. But first, again, if you're new here, I want to give a quick introduction about who Sectors Made Simple is and what our goals are with this company. Then I want to show you that we're not just about trying to sell subscriptions, we are committed to your education as well. So we do offer over 100 hours of free webinars that don't require a free trial, don't have a limit to how many free videos you can watch. Free is free is free. So, I want to show you that. And then we're going to get to the real meat and potatoes of today's webinar, which is giving you a walkthrough of how and why we are improving the Matrix. And then we'll wrap up by showing 3 examples of how the Matrix can be used by beginner, intermediate, and advanced level investors. Sound good? Let's do it. Quick introduction about Sectors Made Simple. Sectors Made Simple was founded as a bilingual community of investors, meaning many of our followers speak English, many of us also speak Spanish, and the majority of us speak both. So oftentimes when you're joining these webinars, you'll see Spanish subtitles down below. All of our websites are offered in Spanish. All of our help and support is also offered in Spanish. So our goal is truly to be a one-stop shop for investors of all skill levels. Whether you're just starting off investing or you're a seasoned investor just looking to gain more information and a competitive edge in the market, we have something for you. We offer weekly educational webinars to our Sectors Made Simple subscribers, and these topics are a wide range of investment, financial literacy, and economic-related topics. Plus, as I mentioned before, we don't just do webinars for subscribers. We offer on our website, learn.sectorsmadesimple.com, over 100 hours of free educational webinars, again, spanning all different types of subject matter. So, if you've ever wanted to learn more about the market, and you want a very safe and fun place to do so, check out SMS Learn, which again is learn.sectorsmadesimple.com. Link will be down in the description down below. So learn more and start growing with us. Again, no credit card needed, no free trial period, none of that. You create a free account. That free account, as long as you want to stick around, gives you access to all of our free webinars. But we do more than just webinars. We also create and offer investment tools as well. These tools center around a few common themes, being relative strength and figuring out ways to use relative strength to find leading companies or ETFs, exchange-traded funds. This is at the core of almost everything that we offer. Relative strength is something that we've found to be extremely successful. It has a track record of success beyond just Sectors Made Simple, but we are inspired to find a way to take relative strength, bring it into the 21st century with 21st century technology and coding, and be able to leverage it to provide more advanced insights at a more beginner and more approachable level. The goal of these tools is to enable anybody, from day traders to swing traders, to someone just wanting to get their feet in the market for the first time, the ability to make more informed decisions. Or, if you're not there yet, don't worry. We also offer basic trading strategies that offer a step-by-step way to discover an investment, and these trading strategies take less than 5 minutes a week to use. That's the correct measure of time. And I'll show you one of these strategies in a little bit here. But first, I want to tell you quickly about May being Matrix for us here at Sectors Made Simple. Throughout the month of May, we are running a series of promotions as well as special events on our YouTube channel here, in these webinars, as well as special events over on our social media channels. Our Tuesday webinars, where you are right now, if you're here with us live, are going to be free to join for all of May. Plus, in some of these webinars, and I will tell you when they are here, we will offer secret little Easter eggs that will give you little bonuses. Plus, we will be announcing giveaways over on our social media channels, including one that we're going to be announcing the winner of in a few moments here. But we have plenty more giveaways coming, so check us out on Facebook, Instagram, or TikTok to be able to enter and join these giveaways. And then finally, just like I mentioned, today we're going to be providing you a sneak peek at one of the many tools that we are looking to improve here at Sectors Made Simple. And this is only the beginning. We have a few unannounced surprises that will be released throughout the month, so keep your eyes peeled. So, before we kick things off and check out the Matrix, I really quickly want to do a roll live for the winner of our giveaway. Over on our social media channels, over the past week, we ran a giveaway for a tablet, and today we will be announcing the winner. So, let's do a quick roll to see who our winner is, and then we'll get right back into the action. And the winner is Florida. Congratulations, we'll reach out to you on Facebook to arrange sending you the tablet. Thank you all so much for joining us. So now, all of that aside, I feel like we've gotten all of the promo and housekeeping stuff done. Let's get into the real content. The Matrix. The Matrix was the first tool that we created because it is also, in our opinion, one of the most powerful tools. It is a tool meant to find which segments, or as they're usually known, sectors, of the S&P 500 are leaders right now. We do this by creating a tournament, known as a round-robin tournament, of different market sector ETFs. So we take 11 different market sector ETFs and the ETF for the S&P 500 SPY, and we compare each combination of these sectors to find which one is beating the other. We evaluate each one of these comparisons at 2 levels: short-term direction or short-term leadership, and long-term trend or long-term strength. So every chart will just boil down to who the winner was for short-term and long-term strength. We then add up all of the wins that each sector has to get a scorecard. And this scorecard is simple numbers to tell us which ones have the highest relative strength. Bigger numbers obviously mean more strength. So that's pretty straightforward. And the beauty of this tool is that it is updated daily, meaning today, which is Tuesday, May 7th, we have the matrix from today's market. That matrix is going to be different than the one from the day before. These scorecards are updated every day so that you have up-to-date information to make your investment decisions with. But then we're missing out on something. Sure, it's really nice to know who the leader is today, but it's also really helpful to know who the leader was yesterday or what sectors are gaining strength or losing strength over time. Who would you rather bet on if we were watching a race? The person currently in first place or the person that's catching up, passing fourth, third, second? If you had to bet on one, which one would you bet on? That question is the reason why we need more than just the matrix. Enter momentum. Again, the matrix gives us a picture of what sectors are leading the market today. But again, it's also very important, if not more important, to know which sectors have gained or lost strength over time. So, momentum is our answer to this question. Momentum allows us to compare today's matrix against a matrix from the past. We have a few set periods that you can choose from, but you also have the ability to choose a custom date as well. Whenever you're looking at momentum, 0 means that there was no change from the historical matrix to today's. Any positive numbers for momentum means that that sector has gained strength over time, and negative numbers means that sector has lost strength over time. Now, that's the basic ideas. But instead of just showing you what the old matrix looked like and trying to compare today's matrix to that one, instead, I want to just give you a quick rundown of what's changed and also what's new. So, when we sought out to update the matrix, these were the things that we wanted to try and improve on. First, and most importantly, we wanted to reduce how much learning or how many new terms or jargon you needed to learn in order to use the information. The goal of the tool is to make it simple to use, so we wanted to get away from technical knowledge and instead bring things down to their simplest level, but also not removing any of the usability of the tool. Second is that we wanted to simplify the view of the data that matters the most. On the old matrix, we offered every piece of information that we could possibly offer, and while that information hasn't gone away, we've also made it simpler, if you don't care about all the little things, to just get the big picture, all right in front of you, all on one page. Also, for those that have heard about our matrix strategies, or for the current subscribers who use our matrix strategies, we've made it even simpler to trade these strategies. And then finally, we wanted to offer you options to customize the information on the matrix. So, if you are a more advanced user or you got used to different pieces of information on the matrix, you can rest easy knowing nothing has been taken away. There's just toggles now, so that if and when you want that information, you have access to it, but if you don't care, you don't need to deal with it. That's the goal. Now, the matrix is not the only thing on the sector summary page. There are a few other resources on here as well that have also gotten a nice little upgrade, but we'll get to those in a little bit. First, I want to show you all what has changed on the sector summary page. And also, what's brand new. So, what has changed and improved in the new version of the matrix and the sector summary page as a whole? First things first, we gave everything a nice fresh coat of paint. The colors of Sectors Made Simple have improved over time, and we wanted our tools to reflect that. So you'll find that all of the colors are a more uniform color system. But getting to the more important things. All of the jargon and technical knowledge of point and figure has been either hidden from the basic view or removed. More importantly, and this is the thing that will matter the most, instead of calling short-term X count or long-term as positive trend, it's now simply short-term strength and long-term strength. The goal here was to better represent what these values mean, and again, getting away from needing to learn what is positive trend. It's long-term strength. Everyone can go into this understanding what long-term strength is. There's no need to call it something else. The other thing is that we've moved the the momentum table up. So now if you're viewing the website on your desktop, the momentum table will be right next to the matrix, making it easier to compare and contrast these two tables. Also, we've made it much simpler to find information or get help if you forget what one table is, or if you want a little bit more information about what that table is doing. So, next to each one of these tables, you will find a nice little help button that will give you information about that table. Then, if you scroll down from the matrix and momentum, you'll find the sector ETF price table. Here, you can find the real-time prices for all of the sector ETFs that we track. The only thing we've added here is now we include the ETF's sector name. So instead of just seeing XLE, you'll see energy as well. That will help make connections in your brain between the sector ETFs that you can actually go to your broker and buy, as well as the sector that it represents. The last thing that has changed on this page is our bullish percent indices, or BPIs. These used to be on their own page, but now that this page is the sector summary page, we want to summarize sectors, and our BPIs do represent sectors, so they've been included on the sector summary page. Cool. So that's what has changed from the old version to the new one. Let's now show you what is brand new. We just talked about BPI, so while we're there, BPI now includes the number of companies that are in each sector. This makes it a lot easier to understand just how big each sector is in terms of the number of companies that make up that sector. Additionally, this one I'm extremely grateful for, dark mode. The dashboard is now offered with a dark mode, allowing the background to become a much darker color, making it easier on your eyes. Or if you're the kind of person that loves doing your stock research at 1 o'clock in the morning, because you're nocturnal like me, less eye strain. So, dark mode. Now, over on the settings page, which is where you'll find dark mode, you'll find a number of new toggles here as well. As I mentioned before, our goal was not to remove information, it was just to simplify the first thing that you see. Part of our commitment to that is making sure that if you want the more advanced info, you have access to it. So, there are toggles to access more advanced info and resources over in the settings. Another thing that we have added is the ability to merge, put together, the matrix and the momentum tables. With this new combined table, you're able to sort a singular column on the matrix or on the momentum side of things and have all of the values be synced. making it much easier if you're looking to compare one specific set of values against another. Also, we have added a little bit more information on the sector ETF price table. Notably, for those that are interested in point and figure data, we have added 2 extra columns here. You can now see, actually 3 columns. We have now added the column for point and figure, so which direction is that ETF going? X's are positive, and O's are negative. We've also added breakout and breakdown, letting you know if that company or ETF is in a point and figure buy or sell signal. And lastly, date. This date lets you know on what day that last signal change occurred. So what day did that stock or ETF go from a sell signal to a buy signal or vice versa? The last thing is if you got used to and you enjoyed having all of the relative strength comparisons on the matrix, that has not gone away. You can hit the extended matrix and momentum button to get a full breakdown of all of the relative strength charts for each sector. As much as I love looking at a bunch of lists on a PowerPoint presentation, how about we go and take a look at the dashboard together? How's that sound? Really quick, I want to see if I've missed any questions. Nope, we're all good. Let's go take a look. So, welcome to the dashboard. Again, a lot of the information here should be familiar to you, because the goal was not to remove any of the really important things. So, here you'll find the matrix. Let me make this a wee bit smaller. On the left here, you will find the current matrix. We have our long-term column here, short-term, and total, which is the short plus the long-term. Maybe a little bit bigger. Over on the left side, we have all of our different sector ETFs plus SPY. As I mentioned before, if you ever forget what the matrix is and you want a refresher, you don't need to go through and rewatch this whole webinar. You can just click on the little question mark, and that will bring up a helpful little menu on the right that will answer some frequently asked questions about that tool. This option exists for all of the different tables. So if you want to know more about momentum, we got you covered. How about sector ETF prices? Yep, we got that too. So our help menus have been improved, but again, one of the things that you'll notice is now the matrix is on the left, momentum is on the right. They've been put together, making it easier to compare and contrast the 2 different tables. Any of these columns can be sorted, making it quick and easy to find the values and the sectors that have the highest values that matter to you. So, if you wanted to know what sector has the highest long-term strength, that would be XLE, or energy. If you wanted to know the one with the most short-term strength, that would be XLU, or utilities. If you want to know the best sector overall, that would be, again, XLU, utilities. As I mentioned earlier, the momentum table shows us how today's matrix compares against one from the past. So we can see here, technology had a really good day today. It gained +5 for its relative strength, meaning that that sector is now has a total count of 8, up from 3 from yesterday. If we click on 1 week ago, we can see how today's matrix compares to the one from April 26th, 2 weeks ago, 1 month, and 3 months ago. So that is the general idea of both the matrix and the momentum. Scrolling down a little bit, we have our sector ETF prices. This price table is going to offer those basic pieces of info I talked about before, being the ETF and what sector that ETF represents, its current price in the market. These are updated real time, well, 15 minutes delayed, as is most data sources for stock prices, but they are updated throughout the day. So they'll include their current price as well as the 1-day change. So how has its price changed today? This makes it quick and easy to find which sectors have done really well today for price. So we can look here and see communications was up 1%, financials up 0.95. Meanwhile, staples and real estate both saw about 0.2% loss. Finally, down below, we have our New York Stock Exchange sector BPIs. These BPIs are representative of the entire New York Stock Exchange, not the S&P 500. But that actually makes the information a little bit more useful, because if we were only looking at the S&P 500, we would be limited to 500 companies. By expanding that to include more New York Stock Exchange companies, we get a much more broad look at the market, giving us hundreds of companies in most of these sectors, as opposed to some sectors in the S&P that have 20 companies to represent that sector. So, all in all, these are the four tables that are offered on the sector summary page. I will give some examples of how each of these tools can be used to invest in a few moments, but first, I want to show you the settings page. Again, my favorite update, dark mode. We're going to stick with dark mode for now. It makes me happy. Under the sector summary options, we have 3 different choices to choose from. Show combined matrix. So keep in mind what this looked like. When we click combined matrix, it is now 1. So now our momentum period selection is here on the left, and the table includes the momentum on the right side, represented by the delta symbols. So these are our momentum values, and all of our long-term, short-term, and total counts from the current matrix as well. If we sort based on long-term strength, if you watch the left side here, you'll see that everything is moving. If you sort by total count, it moves the momentum. If you sort by momentum, it moves the total count and all of the other columns. This makes certain strategies that use our tools, matrix strategies, so much easier to trade. I'll give an example here in a moment. But first, we have 2 other buttons to hit. I love pressing a bunch of buttons. Additional point and figure columns. This will influence the sector ETF price table. Right now, there is no information here about point and figure, so if you don't care or you don't know what it is, you don't need to worry about it. But if you're one that does like that information, you can click on the show point and figure, which will add the point and figure column, the signal, which breakouts will represent buy signals, breakdowns represent sell signals, as well as the date that that signal was given. The final option will again affect the matrix and momentum. For anybody that is used to the way that the matrix currently looks something like this, that option has not gone away. So if you are one that likes to be able to see all of the relative strength comparisons, you still have that ability. The same thing exists for momentum, allowing you to see which momentum charts change. So for example, for technology, we can see that it gained strength compared to energy, financials, real estate, and healthcare. Pretty cool, right? So those are the 3 main buttons. The one that I'm going to choose to keep here, the ones I'm going to choose to keep are the show combined matrix and enable additional point and figure columns. Because we're going to use these in just a moment, because now I want to talk about how can we use this page? How can I use the matrix and the sector summary page? The best way to give examples of how to use it is to actually go in and use it. So what I want to do is I want to share 3 different ways of how we can use the sector summary page and the matrix to invest. One of these examples is going to be geared towards beginner or brand new investors, people that don't have a lot of experience trading in the market and want a lot more guidance on ways that they can start to understand the market better. The next is going to be geared towards more intermediate investors, those that are beginning to take a lot of creativity in how they find opportunities in the market and trying to be proactive in their opportunity finding. And then the last will be geared towards advanced investors. You don't need to be told how to invest, and in reality, you probably don't want to be told how to invest. You know how you like investing, you know what works. We're not going to try and change that. All we want to do is offer you additional information to help provide more market atmosphere information and make your informed investment decisions quick and easy. Let's start off with the beginner. This one is a way of trading that we have invested a lot of time and effort towards creating. Our goal for a beginning investor is to offer simple step-by-step instructions that they can follow to be able to find opportunities in the market. So a beginner is going to use the matrix data as a way of discovering investments. All of the strategies that we cover for beginners involve trading once per week and can be done in less than 5 minutes whenever we go in and trade. Don't believe me? I will do it in less than 5 minutes. And I'll explain it to you while doing so. So let's do an example. While we do offer a number of strategies to choose from, I wanted to highlight this one, the Wednesday total count strategy. This strategy can be done anytime between Tuesday after market close all the way to Wednesday market close. It is recommended for this strategy to use the combined view of the matrix. Again, that will be under the settings section. We will set our momentum to 2 weeks ago. So let's actually follow along and do that, shall we? So we're going to go here, set our momentum to 2 weeks ago. Then we're going to sort this table by total count. So we can do that. So now we have the biggest numbers at the top, the smallest numbers are at the bottom. We are going to highlight any sectors that have total counts of 13 or more. We do that by clicking on the total count cell. So only 2 sectors have total counts of 13 or more, being XLU utilities or XLF financials. Next, we're going to start at the top of the table. Remember, we already sorted it, so we don't need to do any extra stuff here. We're just going to start at the very top of the table and go down this list of only the highlighted sectors, meaning we're going to start with XLU, then we're going to check XLF. Those are the only 2 sectors the strategy is going to consider. This strategy would buy the first sector that has a total count momentum of 3 or more. So here's all you have to do. Start at the top and check XLU. Is XLU's total count momentum 3 or more? No. We go down to XLF. Is XLF's total count momentum 3 or more? No. Uh-oh. There's nothing. We don't have any sector. Well, if no highlighted sector has a total count of 13 and a momentum of 3, the strategy would just hold cash for that week. That's all it is. You check a couple of sectors by highlighting this column and then checking to see if, starting at the very top and going line by line down, the first one that has whatever total count momentum we'd want it to be. And if there isn't one, then it would just hold cash. This is my favorite strategy. There you go. I didn't prop that. Now, that is how simple a strategy can be, but simplicity is one side of trading strategies. And by the way, if you wanted to know how long that took 3 minutes to walk you through it and also show how it could be done. But let's answer the more important question. Do they work? All right, let's burst the bubble a little bit here. I do want to remind you, past results don't guarantee future performance. Because something has worked well in the past does not mean that it is going to work well in the future. But that is the reason why we don't just say, here's one strategy, trust us, it works. Instead, we offer many different strategies to choose from, as well as we provide you their up-to-date returns. So if you're watching this webinar 4 months from now and you buy a subscription and you go in and check out our strategies, you don't have to trust me when I say the Wednesday total count strategy is cool. Go see the results for yourself. If you are one that really likes to dive into data, we do offer backtesting within the matrix. So you can see all of the results for yourself. You don't need to trust me and hope that what I shared 6 months ago still works. Verify the results for yourself. We provide you up-to-date data on the returns of that strategy. We compare them to the S&P 500, and we give you the option to load and even download the full results for yourself. Trust, but verify. But that's not a very fun answer, is it? So let's give you the more fun answer. Yes, these strategies have worked well in the past, and this strategy is no exception. Its 3-month returns have been 11.1% compared to 4% of SPY, the S&P 500. 6-month returns, 22.5% return to SPY's 19.3%. 12-month returns, 34.2% to SPY's 24.4%. And lastly, 36-month or 3-year returns, 130.2% to SPY's 25.8%. So, has the strategy worked well in the past? Yes. It has beaten the market over the past 3 months, 6 months, 12 months, and 3 years. And what I didn't highlight here is that it has done all of this while offering lower risk than the S&P 500. One of the things that we show you is called max drawdown, meaning what was the risk? What was the worst that strategy did? And in all 4 of these different time periods, not only did the strategy offer higher returns than SPY, it also did so with less max drawdown. Higher reward, less risk, less than 5 minutes a day, or less than 5 minutes a week. That's all it takes. So that's the introduction to Sectors Made Simple. You can pick it up, purchase a subscription, learn a strategy in minutes, and start trading it. And again, historically, these strategies have outperformed the market. But don't take my word for it. Load up the strategies panel, check and verify for yourself. Now, for the past 3 weeks, it has worked great. Last week, I invested in XLU. That's really cool. Shall we check out how XLU has done? Five days for XLU, 3.9% return. That ain't bad. What was SPY's? 3.1%. So, we're beating SPY, and also still making profit. Double win. Now, let's talk about an intermediate investor's way of using the matrix. I'm going to cheat a little bit here, and I'm actually going to share 2 ways of using our tools as an intermediate investor. Sorry, my webinar. The reality of it is, the beginner strategy isn't just for beginners. Anybody can use those strategies. It's not like we ask you, are you a beginner, and only offer those strategies if you are. Anybody can look and evaluate those strategies. But an intermediate investor is able to take the strategy's information and use it as an opinion. Instead of just looking to see what the strategy is doing and deciding if they want to follow it or not, remember, they are never requirements to buy what the strategy is saying. It is never a recommendation to buy what the strategy is saying. It's always an opinion. An intermediate investor can begin to take that opinion and use it as a part of a decision-making process. So they can look and see, all right, there's 2 different strategies for Thursdays. One strategy is saying buy XLY, discretionary. The other strategy is saying buy utilities, XLU. Okay, I'll maybe buy a little of one, little of another. Or both are saying XLU. All of a sudden, you gain a little bit more confidence because 2 different opinions are saying the same thing. I did an entire webinar back in April demonstrating how you can take these strategies and use them as opinions, and all of the different ways that you can do so. So we don't just say, here's the simple strategy, figure it out. Instead, we give you the knowledge and the resources to suggest how that tool, that strategy, can become a part of your decision-making process, not the end of your decision-making process. Cool. That's the cheating answer. Let me actually give you a new way of using the sector summary to invest. If someone wanted to invest and invest a little bit more passively, you know, an intermediate investor, they're not sitting by their computer day trading day in and day out. They're checking the matrix, they're updating their investments after they get off of work, and they're keeping it easy. So, one thing that they can do is look for opportunities just like any other stock. You go and you check out a stock and you have an idea of what you're looking for if you're doing technical analysis, using price to figure out when to buy or sell. You can do that using point and figure as well. It relies on a style of investing called support and resistance, where when a stock's price or an ETF's price goes above a previous level of resistance, that is known as a buy signal. When a stock goes below a level of support, that is a sell signal. Those are not our terms. Those terms are outlined by point and figure charting. A quick summary, because this is all you would ever need to know to actually use the tool. Columns of X's indicates that it's a positive price direction. O's indicate negative price direction. And breakout signals are known as buy signals because they break out above a resistance barrier. Breakdowns are known as sell signals because they break down below a support barrier. That's it. So, an intermediate investor can use this tool. More importantly, the sector ETF price changes tool. And they can check to see if there are any sector ETFs that have recently gone on buy signals. Let me show you. All that would look like, you go to the sector ETF prices here, and you check, are any of these signal dates somewhat recent? All right, there was a signal on 4/19, but it was a breakdown. It was a sell signal. Probably not what we're looking for. But XLU went on a breakout on April 25th, and that was a buy signal. That could have been an indicator for an intermediate investor to go in and buy XLU. Now, that is, again, just a singular, simple example. The question now is, can you be a little bit more proactive? Instead of just relying on waiting until a signal has happened, can you try and anticipate or set an alert for when a stock goes on that breakout, or rather an ETF goes on that breakout? Yeah, you can. Because remember, not only do you have the date of a signal, you also have its direction. So what you can do is you can go here and you can look for things that are in point and figure columns of X's, meaning the price is currently going up, but it's currently on a sell signal. An example, technology. Technology is currently in a sell signal, but the price is going up over time. So an investor could go in, set an alert for technology, and they're done. You don't need to go through and check dozens upon dozens of charts, trying to figure out where the signal is, when the signal was. It's simple and easy. It's all on one page, and it's all right here. If you want to find things that have recently broken out, find things with a signal date that is pretty recent. If you want to find things that might break out, find things that are in columns of X's, meaning the price is going up over time, but are still on sell signals. How long did that take me? 2 minutes? Less? That's the power of having good tools and good data to use. We do all the hard work, so you get to do the easy analysis. Now, let's wrap things up by talking about the final way that you can use, or the final example of how you can use the matrix. This is going to be an example for a more advanced investor. Again, this investor doesn't need strategies to follow and doesn't need to be able to identify buy signals in the market. What they want is they want more market insight. They want more context. They want to understand the market at a deeper level so that they can try and understand how much potential risk there is within a given sector or within the market as a whole. So, for the advanced investor, they would likely want to leverage the bullish percent index table, or BPI. The BPI gives us a percent to tell us what percent of companies in that sector or group are currently on point and figure buy signals. So if we see 70%, that means that 70% of the companies in that sector are currently on buy signals. That might sound like a good thing, but is it? If 70% of companies are already on buy signals, that means that there's only 30% that aren't on buy signals. That's a much smaller pool of companies if you're looking for breakouts, if you're looking for those levels of important breakouts or breakdowns. If you're someone that wants to do a trend analysis, you're going to care if the overall momentum is going one way or another. To draw a comparison to a metric that is probably more familiar to many of you, well, first, just like with the price table, these BPI tables are shown as point and figure, meaning X's tell us if the BPI is going up over time, while O's indicate that it's going down over time. Now back to what I was saying. I want to draw a comparison for BPI to something that you might be more familiar with. BPI is to a sector or to a group of companies as RSI is to a singular stock. Both are evaluated on a scale of 0 to 100%. Both use a similar idea that the 70% line and above indicates that that security or group of securities is currently overbought, while anything below 30% indicates that it is oversold. With this, not only do we understand what the BPI is and what percent it is, but we also understand its direction. So, by analyzing this BPI, as well as its direction, an investor can try and find sectors that are potentially overbought or oversold. Also, they can see the direction of its movement. So, for example, an area of opportunity for a savvy investor might be checking out a sector that is currently oversold with a BPI below 30%, but that number is currently increasing. It is in a column of X's. That indicates that there is positive movement, and also it is still oversold, meaning there is plenty of room to grow. Again, these BPI numbers are updated daily, helping you keep on top of any and all market changes. So with that said, let me show you what I'm talking about. So we can go down here to BPIs. And let's start off with two sectors that we just talked a little bit about. We talked about utilities. Currently, if we look at utilities, it has the second highest BPI on the entire table at 66.67%. That BPI is currently increasing, meaning it is going up in the short term, and it represents 72 total companies. That means that there's only 1/3 of that group that is still in sell signals. Okay, that's fine. That's good to know though, right? That means that there's 24 companies that are not on buy signals. But more importantly, that number is inching pretty closely to our overbought line, that 70% threshold, which means there is potentially more risk if that sector starts to fall out of rotation, and there's a lot of room for companies to fall before they would reach any sort of bottom or any sort of support levels, or break those support levels even. Compare that to technology. We just talked about the fact that technology is gaining strength on the one-day momentum. Again, going back to the matrix, we talked about how technology's point and figure chart is currently increasing, but is still on a sell signal. But we also see here that its BPI is 40%. It is the lowest BPI on the entire table. And that number is still decreasing. So that tells me two of two things. First, it tells me that right now, the reason that it is probably gaining strength is not because technology as a sector is doing well. It's likely that a few companies within technology are doing very well. So that's a potential point of caution. There is a difference between the market cap leaders within a sector, ETF, and an equal weighted value like BPI is. And again, if what I'm talking about right now is crazy to you, don't worry. The goal here is to demonstrate different levels of experience and information and how you can use the exact same tools to create completely different outcomes. But we also have plenty of resources to help you get from where you are now to the level that we're talking about. But back to where we were. Again, technology is a sector that is gaining strength right now in the one-day momentum, has potential as a market cap weighted ETF, meaning bigger companies have more influence on that price. But on an equal weighted level, the sector is still very weak. So if I was looking at areas of opportunity, I might be keeping a closer eye on technology. Not because it is the leader right now, not because it might go on a buy signal and I can buy the ETF, but instead because there is 60% of the sector that is currently not on buy signals. That creates a lot of room and a lot of opportunity. If this BPI begins to go back up and we see technology companies improving in the short term, there is plenty of opportunities to invest in individual companies within that sector as well. This is, again, just meant to get the conversation started. These are simply examples. Our goal is not to show you every individual possible way that sector summary data can be used. Instead, it was to highlight each segment of the page. The beginner is only going to use the matrix likely. An intermediate investor might use the matrix, but also might use the sector ETF prices. And an advanced investor is going to use all three tools: the matrix and momentum, the ETF prices, and the bullish percent indices. If you are a beginning investor right now, but you want to become an intermediate investor, don't worry. These tools have been a learning process in development and exploring ways that they can be used. We have documented the process of teaching the skills, knowledge, and way of thinking needed to go from a beginning investor just dipping your toes into the water for the first time, all the way to that advanced investor making creative, informed decisions. We want you to know that there are tools and resources for anybody, as well as education to help you every step along the way. Our goal was to demonstrate all of the ways that this resource, the matrix and the sector summary page, can be used. And again, within our webinars, not only will we teach you the knowledge and information needed to help you reach your financial and investment goals, but we also cover a wide range of strategies and trading methods that utilize the matrix and all of the other tools on the dashboard. And again, as I just mentioned, all of our tools are always growing, but so are the ways that we discover to be able to use these tools to invest simpler, for beginners all the way up through advanced traders. So, this has been a detailed look at the improvements that we've made to the sector summary page and to the matrix, but also providing you examples and starting points. If you wish to purchase a subscription and explore the matrix for yourself, you now know where to start. Next week, in honor of keeping things fun and interesting for me, we're going to be mixing things up. Instead of talking about more of the tools, we're going to take a quick detour. Because right now, there's a lot of conversation going on around company earnings, and a lot of companies are issuing negative guidance, meaning that they're looking at estimates for quarter 2 and on and saying, yeah, we're not going to hit that. That is why we are seeing so many companies like Disney, for example, today that went down 10%, dropping because of their earnings. But does that mean that our economy is slowing down? What's the context for that, and what data can we keep our eyes on to get a better picture of where the stock market and the economy are headed? Well, this is something I talk quite a bit about in our members' webinars. I do monthly market reviews and economic forecasts. I also do earnings, season updates, and everything in between. So, next Tuesday, join as I review both market and economic data points to help us answer the question that's still on everybody's mind. Will we see a recession in 2024? I have my answer. I want to show you the data that I used to come to that conclusion and empower you to take control and come up with your own answer as well. So, find out my answer and all of the knowledge and resources that I used to come to that conclusion in next Tuesday's webinar. Again, throughout May, all of our Tuesday webinars will be free to join for anybody. So if you have a friend that's been nagging you about a looming recession, have them join us for next webinar, where they'll find out a more data-oriented approach and answer to that question. Until then, thank you all so much for joining us today. It was such a pleasure to get to show you our continued commitment to making investing simpler for everybody, and to show you just what we've been working on throughout May and coming soon to a matrix and dashboard near you. Thank you all so much. If you have any questions, you can send us an email at support@sectorsmadesimple.com. We'd love to hear from you. Until next Tuesday, see you all very soon.